This is Asia Trade. I'm Shery in Tokyo.
I'm Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set for further losses, with markets seeing no sign of how the Iran war may end. The S&P 500 on the verge of a correction, while US crude extends gains after topping $100 for the first time since 2022. President Trump again threatening to destroy Iran's energy plants if it doesn't reopen the Strait of Hormuz, as the White House insists that Tehran is increasingly eager to negotiate. Kuwait says an Iranian strike has hit a crude tanker in Dubai. And Treasuries bounce after Fed Chair Jay Powell eases fears about the war's impact on inflation, with traders raising bets on a rate hike. Well, we are getting breaking news just crossing the terminal regarding just the destruction of more assets across this region. We are hearing that an Iranian strike has hit a Kuwaiti crude carrier in a Dubai port, according to the KPC. So the Kuwait Petroleum Corporation announcing that around 12:10 a.m. on Tuesday, the Kuwaiti very large crude carrier Al Samni was directly attacked by Iranian forces while positioned in the Anchorage area of Dubai port in the UAE. So we're continuing to see really the potential widening and escalation of this conflict, even at a time where we're seeing the US and President Trump still quite hopeful as to whether we'll see a negotiation and a ceasefire negotiation. But at the same time, of course, also threatening further escalation of its attacks on Iran, including targeting critical civilian energy infrastructure. We're seeing little show of relief when it comes to these markets, the global markets, particularly energy markets, continuing to whipsaw on this action. You're seeing Brent crude up by 2%. The New York traded crude, which has sort of over the last few weeks seen that gap a little bit behind what we're seeing as the global benchmarks. We're seeing upside of close to 3% at the moment. Let's bring up Bloomberg Politics editor Laura Davidson. Laura, I thought the tweet from President Trump yesterday really kind of contextualized how uncertain it was, because on the one hand, he's making further threats, more severe threats. On the other hand, he's still sort of, optimistic that a deal will be done. We're now hearing of now this Kuwaiti asset being hit as well. So there are all signs that we're seeing widening and escalation of this conflict.
Yes, we've seen President Trump really vacillate between saying that he's optimistic a deal will come together, thinks it'll come together soon. He says that the Iranians are being, quote, reasonable. And then almost, day by day, he'll switch and say that, we just heard, him in the U.S. morning renew those threats to strike energy sites within Iran and perhaps even desalination plants. I'll note that would be a war crime. So we're really seeing sort of two sides, and depending on the mood, depending on the vibes on any given day, he's sort of toggling between these two positions. This is after we've seen kind of additional parties get into this war. The Houthis over the weekend, they got engaged in the conflict. The U.S. has sent thousands more Marines to the area. Those have not been deployed yet, but there's a lot of speculation about what kind of missions those could be sent on, with Trump even speculating that he is thinking about some sort of taking of the Iran oil that would involve an operation on Kharg Island. And this latest strike from Iran, targeting a Dubai port and Kuwaiti tankers, suggests that Iran is really nudging U.S. allies in the region, expanding the pain for them, in a hopes to put pressure on the U.S. to end this conflict.
And we're hearing the latest also coming from an Iranian news outlet citing the first vice president, Aref, on a warning to the United States, Laura, as we speak, saying that U.S. troops will face death if sent to Kharg Island, claiming the vessels tried to transit through the Strait of Hormuz, and that they've turned back 3 container vessels in the strait as well. So we're getting more reaction from the Iranian side. Laura, describe to us what's been the situation when it comes to this back and forth between the two sides, especially with what Tehran is saying, because up until yesterday, President Trump has said that Iran had agreed to most of the points in his 15-point plan.
Yes, what the U.S. has been saying publicly and what the Iranians say publicly do not square. Trump has been very, optimistic, saying that the Iranians have agreed to several points of that 15-point plan the U.S. sent over last week. He said that they are, talking with a bunch of folks, both directly and indirectly, and is optimistic that a resolution could come. The Iranians, meanwhile, have said that no talks are happening. There are mediators involved. Egypt and Pakistan, for example, have been sort of passing messages back and forth, but said they are not negotiating negotiating with the U.S. They have not agreed to any such peace plan. So it's really unclear exactly, who is telling the truth here, because both of these scenarios can't necessarily be true. This is all against the backdrop of, Trump really musing about different military operations. The Pete Hegseth, the U.S. Defense Secretary, has said multiple times that Iran's military capabilities are weakened, though we've seen them be quite effective in some of these strikes, hitting a U.S. large aircraft in a Saudi airbase over the weekend, and then also this latest strike on these tankers.
Laura, this is, we see really that catch up when it comes to WTI, right? New York traded crude seeing that gain close to $106 on this latest news of the Kuwaiti tanker strike. We also have sort of heard from the Fed and Fed Chair Powell as well. Are we seeing these energy price pressures, the inflation pressures start to play out when it comes to within the US? Is the administration worried about that in a year that holds midterms?
Yes, this is something that at least folks in the Republican Party, people who are running for re-election, are worried about. Those fears have not yet really percoled up to the Oval Office and to Trump's inner circle, where continuing this war is the priority. But with gasoline topping $4 a gallon in some places, in some states closer to $6 a gallon, this is a prime concern for the Republican Party. Trump's party faces an uphill battle going into these midterm elections. Republicans hold majorities in the House and Senate, though are at risk of losing those, and that means Democrats will have a lot more power in Washington to block Trump's agenda, to investigate him, his family, his allies. So there's a lot of political considerations that have people in Washington, Trump's allies, worried, but Trump himself hasn't really yet focused and pivoted his geopolitical plans to match what his domestic policy advisors would like him to do.
What's the latest when it comes to third-party players? We just heard from the Egyptian president, not to mention that we're hearing ramblings that there might be some divisions within the Houthis' leadership as well.
Yeah, so the Egyptians had reached out, putting pressure, on both sides to end this and to kind of enter more serious negotiations. Right now, it's all been these broader in public negotiations. The Houthis also divided on exactly how engaged they want to be. Iran is pushing them towards some sort of blockade in the Red Sea, and that would also further push oil prices up. Bloomberg Economics predicts closer to $140 a barrel. But there's been a lot of internal division, showing kind of the same sort of vacillating we've seen between both Iran proxy groups and U.S. allies in the region of just how much they want to commit of their people, their time, and their political capital in what seems to be a sprawling and escalating conflict.
Bloomberg Politics editor Laura Davison there with the latest on the ongoing conflict in Iran. And of course, this is expected to pressure markets across Asia when they open as well. We have seen the Nikkei already falling for a third consecutive session. The Korean Kospi is also at the lowest level in more than 3 weeks. And what we've been watching in this part of the world has been the downside pressure on Asian currencies. The Japanese yen strengthened a little bit in the previous session, given that we heard from the finance minister officials, the BOJ Governor Ueda as well, trying to prop up the currency. Today, what will be interesting is watching the 2-year JGB auction, given, of course, what we saw in the overnight session. With treasuries rallying, we had a little bit of support when it came to U.S. equities as well, despite the fact that we were under pressure because of the tech sector with that semiconductor weakness around memory storage continuing in the overnight session. You can see U.S. futures at the moment down 0.4%. But Chair Powell's comments downplaying inflation risks did provide some support. Take a listen.
Inflation expectations do appear to be well anchored beyond the short term, but nonetheless, it's something as we will eventually maybe face the question of what to do here. We're not really facing it yet because we don't know what the economic effects will be.
Our chief correspondent for FX and rates in Asia, Ruth Carson, joins us for more on this. And Ruth, the market action in the overnight session was pretty interesting around treasuries. Also, the dollar now headed for its best month since September of 2022.
Absolutely. And macro investors are very much still focused on the headlines to drive where the next bets will be. And that's why we're seeing this huge bid in the dollar, as soon as the war started. And even till today, even though, currency markets do whipsaw a little bit here and there, the bottom line is there is nothing like King Dollar when it comes to safety. Not treasuries, not gold, not crypto. It's just the dollar. And treasuries has been very interesting too. We heard from Fed Chairman Powell there talking about, the war and inflation impacts. Investors are weighing this and going, do our inflation risks outweigh the risks of a growth downturn? And that's why we're seeing, big bits in treasuries now as we enter into the 5th week of the war.
How much further support can there possibly be for the yen in this sort of environment?
Yeah, and that's a great question, Heidi, because as we all know, the yen has been under pressure. It has not acted as the haven it was supposed to be in a traditional sense. And it comes down to inflation. It comes down to the fact that Japan is a huge importer of energy, much of which comes from the Middle East. So thick in the middle of the action there. And investors are judging this as a negative. Negative for the Japanese economy, negative for inflation in Japan, and negative for the yen and JGB. So is this pressure going to let up anytime soon? Let's talk about it when the war finally ends.
And when will that be is a key question, right? $1 million question at this point, if not more, given, of course, the disruptions that we're seeing in oil prices as well. But we do have a 2-year JGB auction here in Japan today. We saw the Treasury rebound in the overnight session. And of course, we're seeing gyrations in Korea, in Australia, as well as we saw that exemption on fuel taxes as well. What are you expecting in the market session today, especially around the sovereign bond space, which has seen lots of gyrations?
Yeah, and it comes down back to what happens in a US session as well. We saw a big rally in US Treasuries that will often set the tone for Asia, unless another headline comes to derail everything else in between. So 2-year auction coming out in Japan, it is definitely smaller on the duration scale. It's more easily digested by investors. Say, for example, if it's a 30-year sale, that will be slightly different. So definitely all eyes on the 2-year. It is sensitive to policy. It is sensitive to headline risk there, but definitely less of a risk event compared to, say, an auction of a longer tenured debt.
We spoke about the yen. We've also need to talk about sort of the limitations when it comes to where the rupee can go from here, right?
Absolutely. The other big currency in investors' focus, particularly in Asia trading desks today, will be the rupee. We saw the news article that Bloomberg News broke on how there are new intervention tools in play by the RBI to curb speculative positioning on the rupee. Now, I think it is important to remember, though, that the rupee was weakening to a record low virtually every other day leading into the war. So the question that is on a lot of investors' minds at the moment when they invest in the rupee is, is this just another tool in the toolkit, but markets are going to dictate where the rupee goes? And if so, well, we have to look at the macro environment, right? Oil above $100 a barrel. We know that India imports energy, imports oil. The pressure isn't going to go away. So could dollar rupee go higher from here? The consensus so far is still yes.
Our chief correspondent for FX and rates in Asia, Ruth Carson, particularly if, of course, the risk derived from the Iran war continues to rise. And we are really seeing that given the latest development of Iran striking that Kuwaiti crude carrier in a Dubai port, according to the Kuwait Petroleum Corporation. That was a tanker that was fully laden, the attack resulting in damage to the hull. There was an outbreak of fire on board as well. There could be a potential oil spill in surrounding waters. So while we're monitoring that is clearly going to be another threat to the mood for risk as we get into this Asia session, further pressured by really deteriorating risk sentiment. Crude oil extending those gains. We're just at about $106 when it comes to New York traded crude early this morning. WTI crude futures high now by over 3%. There's very little signs of the conflict abating, despite, of course, some of the conflicting messaging that we've had from President Trump and the White House. On the one hand, quite optimistic and saying that Tehran is more and more eager to do a deal. On the other hand, saying if they don't come to the table for a deal, they would expand their attacks, including critical civilian energy infrastructure, if they don't reopen the Strait of Hormuz, that they would, quote, blow up and completely obliterate electricity plants, oil facilities, possibly desalination infrastructure. So, Shery, as usual, as we've seen in this conflict, a lot of mixed messages and not a lot of places for markets to hide at the moment.
Yeah, and really the Iran war taking over the narrative in the markets, right? But it's interesting that we need to keep an eye on the fractures continuing in the AI narrative as well. So coming up on Bloomberg Television, we'll actually speak to the CEO of space data center startup Starcloud. They're actually trying to build data centers in space, and they just had their latest funding round, and we'll be asking about the impact of the SpaceX IPO as well. Also, do watch out for other conversations later today. We talk to the CEO of Casino Biologics and ask Innovation Ventures about the risks and opportunities in Chinese AI. We have much more ahead. This is Bloomberg. The weakness in the chip sector continues. We actually saw that pressuring the overnight session with memory storage names. This AI trade narrative fracturing after Google's TurboQuant announcement raised concern over NAND and flash demand. There's a little bit of a divergence, though, in this story now. You can see the Kospi lost about 5% in the last 10 days. And during this time, we saw actually more analysis that perhaps TurboQuant poses more risks for flash memory. So that would be the likes of Kioxia, for example, here in Japan, than to makers of high bandwidth memory, such as Samsung, SK Hynix as well. But so far, we have seen that downside pressure on Korean stocks at the lowest level in about 3 weeks or so. Of course, we do have the Middle East tensions to contend with. But let's get more on the moves around chip stocks and bring in our Asia tech correspondent, Annabelle Drewlers. Bell, because we continue to see this pressure, this concern about demand over memory.
Yeah, that's right. And to your point, I think it's really how investors are continuing to think about this new release from TurboQuant. Actually, it's not necessarily new, but Alphabet or Google only just started publishing that research, or publicizing it rather, last week. And so, as you said, investors have really been trying to decipher what it means. And now we've actually got more nuance in the story and understanding, as you said, it actually could be a bigger impact on the flash memory makers as opposed to HBM. And that's the divide that we really saw overnight, where those flash memory makers were really under pressure in the session. So just to sort of give a bit more context on this, what TurboQuant essentially is about is making operating AI more efficient. And so it directly reduces the need for high capacity storage that flash provides. HBM, though, still remains critical for the raw processing speed that's required by AI training and inference. And for that reason, names like SK Hynix or Samsung could end up being a bit more insulated, even though I was just actually having a look at how they're going in the early parts of Asian trade this morning. You can still see that they're under pressure, but not perhaps the amount of selling that we saw in the evening or over on Wall Street at the start of the week. The other name that you mentioned there is Kioxia, and it's actually also particularly interesting, just given that we've seen so many day traders and hedge funds continuing to pile into this stock. It's actually hugely popular as a short-term play. Turnover in this stock has absolutely been spiking in the first quarter of this month. And so that also adds to the volatility that we're seeing in this name in particular. You can see over the past 10 days, but some quite big fluctuations there.
Belle, we're learning a bit more about these ChatGPT super app or apps within the app plans by OpenAI.
Yeah, that's right. So this one is actually, seems like another foray of OpenAI's that hasn't really been panning out.
just yet, actually, for the company. So last year, OpenAI actually unveiled quite an ambitious project, essentially, to let companies like Spotify, Booking Holdings, for instance, launch mini apps within ChatGPT. And so the whole idea was for users to be accessing these different ecosystems, but not leaving the chatbot. So it's sort of like the App Store debut from Apple. And it really did look to be a key step that OpenAI would need to be taking to transform ChatGPT into an all-in-one platform. But 6 months later, what we're hearing from sources and people that are familiar with the matter is that the efforts in this seem to have stalled. There's now more than 300 app integrations available, but they are hidden away. Functionality also remains limited. And there's a couple of different concerns here. If you're one of these partner companies, one of the biggest is that they don't want to really be handing over these key payments channels, these key customer data points as well, to ChatGPT, and that seems to be one of the major concerns here. So, yes, it is going to be essential for ChatGPT to be drawing in more third-party integration, especially when it faces a lot of competition from the likes of Anthropic, for instance, Gemini as well. But there are a list of different product bets now that are building for OpenAI where it's kind of faced, again, as I said, a bit of lackluster success so far. For instance, last week we were talking about how it's discontinuing Sora, which is the video generator partnership that it had in Hollywood. There's also this plan to fold its nascent browser into a single desktop app with chatbot and coding tools. That's called Atlas. And again, we've also heard that that's had some early growing pains. So certainly still some pressure there for OpenAI that we're seeing.
Bloomberg's Annabelle Drewlers with the latest of our big tech stories that we're following today. And actually, you can get more of them on the Bloomberg Video Hub. You can also check out past episodes of Bloomberg Tech Asia and other shows on Bloomberg.com/videos. We have more ahead on the Asia trade. This is Bloomberg.
The latest from the corporate front, and a new Trump administration proposal may give companies greater legal protection when offering alternative investments in retirement plans. The move could open the $14 trillion 401k market to firms like Blackstone and Apollo. It would also make it easier for funds to add private equity, private credit, crypto and real estate to retirement portfolios. Shares of Fannie Mae and Freddie Mac surged after hedge fund billionaire Bill Ackman called the mortgage finance giants stupidly cheap. Ackman says that the stocks offer what he calls asymmetry at its best, arguing some of the highest quality businesses are now trading at deeply discounted prices. Despite the rally, both stocks remain more than 50% below their mid-September highs.
Take a look at how we're setting up for the Asia session, because U.S. futures are looking like this after a very interesting session overnight. We had the downside pressure coming from the weakness in the semiconductor side of things. Of course, we continue to see those concerns about NAND and flash memory. So we had memory storage stocks under pressure. We got a little bit of support coming from Chair Powell's comments downplaying inflation risks. So we had this turnaround when it came to the Treasury market, with Treasuries rallying in the overnight session. So essentially, pressure, really those that pricing in of rate hikes almost turning to pricing in of rate cuts this year, with growth concerns at the forefront. We're still seeing the U.S. dollar at the moment now seeing its best month since September of 2022. We have more ahead on the Asia trade. This is Bloomberg. We're getting breaking news out of Japan. We are getting the Tokyo CPI numbers, headline inflation rising 1.4% year-on-year. This is for the month of March, coming in below economists' expectations. When it comes to the core CPI numbers, it's also missing economists' expectations and coming in at growth of 1.7%. Exclude energy as well, and you have core CPI. That's matching economists' expectations and rising 2.3%. Now, the three figures are decelerating from the previous month. We continue to see some price pressures, though, underneath for Tokyo. We are really factoring in those base effects from the previous month, but we know the services inflation has remained firm, not to mention the rents across Japan are rising, and the Tokyo CPI numbers will give us an indication of where national prices are headed. But of course, Heidi, really the concerns about inflation global right now, given how oil prices continue to surge on the Iran war. What happened overnight with the comments from Chair Powell, though, were pretty interesting because he downplayed those inflation risks, saying that the Fed has little control over supply shocks and longer-term inflation expectations appear to be well anchored. Of course, this was one of those comments that led to a little bit of support for U.S. stocks, although we did see the downside pressure when it came to the tech sector continue about that AI narrative fracturing around memory demand.
There's no envy, Shery, if you're a central banker at the moment trying to navigate this short-term and medium-term uncertainty, because, of course, there's a lot of conversation about, well, even if longer-term inflation expectations are well anchored, what are the medium-term expectations, even if the war was to wrap up in the coming days? There's already been a lot of destruction to infrastructure, and to that point, even just over the course of this morning so far, we've heard about that Iranian strike on the Kuwaiti crude carrier in the Dubai port. That was a fully laden tanker there. We've seen damage to the hull and oil on board as well as warnings and alerts being issued for residents as well. We're now just getting an update on that situation. Dubai responding to the drone incident affecting the Kuwaiti oil tanker, saying that they're trying to bring the fire on the tanker under control. This comes at a time as we continue to see further threats from the Trump administration. If the Strait of Hormuz is not reopened, if Tehran doesn't come to the table for negotiations, which President Trump says that they are doing so, but there's just a great deal of uncertainty that we're contending with at the moment. Well, Bloomberg Economics estimates that if the Iran-backed Houthis begin attacking tankers in the Red Sea, oil prices could surge towards $140 per barrel. Let's bring up Bloomberg oil and gas reporter Dan Mehr. Dan, really good to have you with us. So those are the estimates. It's interesting, we are seeing that pretty quick catch-up when it comes to WTI at the moment, just reacting to the tanker being attacked.
Yeah, we have so much happening right now in the oil markets. Every time you go to bed, you wake up and it seems like there's 5 new developments. Bloomberg reported that Iran is talking to the Houthis about disrupting shipping in the Red Sea, which would be really impactful because the Saudi Arabians have been pushing oil from the Persian Gulf across to the port of Yanbu, where they've been able to ease some of that pressure off the Strait of Hormuz. But now if that infrastructure gets attacked, you're really talking like $20, $30, $40 spike in oil prices would be completely within line. And traders continue to look for signs of any movement toward an off-ramp, toward a de-escalation. But instead what we're getting is the opposite. We're getting, the Strait of Hormuz is still largely choked off, except for tankers of either connected to or friendly with Iran. If you look around the Asia-Pacific region, you're seeing, petrol stations without fuel in Australia. You're seeing in Korea asking people to reduce the amount of time they're driving. We're really seeing the impact of a supply shock already on consumers. And oil prices have been relatively sanguine. We're still sitting there in the low 100 levels. And so there's a lot of room for this to get much worse, much faster if things don't turn around fast.
Dan, and what happens if the Houthis resume their campaign when it comes to the Red Sea shipping route? Because even the threat of missiles, even the threat of any attacks could deter more vessels coming through that lane.
Yeah, so right now that's a vital conduit because with the Strait of Hormuz closed, like I said, where the Saudis are pushing about 5 million or so barrels a day out to that Yanbu port, which can then circle around the Bab Strait into Asia. If that all of a sudden is closed off again, you'll then have to reroute those cargoes through the Suez Canal around Africa. You're adding at least a month or two before supplies that are really needed in Asia right now could get here. And then there's even more chances of attacks on Yanbu, which would further delay more supplies getting out to the market and maybe delay them for months. So what the Houthis do next will have huge impacts on the oil market.
Bloomberg oil and gas reporter Dan Murto, they are digesting the latest on the Iran war and, of course, a possibility that it could hit the oil markets even more. And, of course, that has really had big repercussions for Asian markets, especially South Korea, that relies heavily on Middle Eastern oil. Not only oil, but also petroleum byproducts. So we have seen the Kospi lose ground to the weakest levels in about 3 weeks. And you can see Kospi futures closing to the downside of more than 3%. And you can see early trading in Samsung Electronics, SK Hynix also potentially pointing to more losses in the semiconductor side of things. We have seen, of course, those concerns around memory demand really spreading throughout the tech sector. So you have seen foreigners also, foreign investors fleeing the South Korea market, as you can see in that chart on the right. The Korean won, in fact, is still at the weakest level since 2009, surpassing that 1,500 level, which is pretty dramatic when it comes to the currency movement in this country. Now, the bullish chorus on South Korean equities really cracking as the Iran war exposes those vulnerabilities. Let's bring in our Asia equities reporter, Winnie Su. Winnie, so we've been really focused on a handful of growth stocks, but how are investors positioning now?
Yeah, morning, Shery. As you mentioned, we are seeing that big outflow of foreign investors out of South Korea. For this month alone, we're headed for another record outflow, and that's really showing how fast they are turning their kind of positioning from betting a lot on South Korea. We're talking about it being the best performer until this war happened, and now this month alone becoming the worst performer out of all global major benchmarks. And you mentioned a couple drivers. The war, the exposure to oil imports, and then with the AI scare, of course, when it comes to betting on interest rates to stay higher for longer, that's also going to hurt the demand, the growth in the AI-related stocks, and also these breakthroughs when it comes to Google's new compression technique. That's also hurting when it comes to the demand for memory chips. But adding to that, we're also talking about more technical stuffs, right? Including volatility. We saw these big swings. You know how many sidecars we have so far this year? We had about 10 already, and that's compared to 3 last year. And when it comes to circuit breakers, we have 2 this year, but historically we've only had 10. So these volatilities for investors, they see that as lots of flighty money in the market, so a bit more hesitancy. And you just mentioned that concentration in just 2 big names, Samsung and SK Hynix. Goldman actually just had a note over the weekend saying that the recent sell-off is also mainly driven by these 2 stocks. So relatively narrow breadth is also hurting the appetite for South Korean stocks.
Where is the money flowing to then?
Yeah, so when we ask investors that, a lot of them right now say because of that uncertainty surrounding the war, still prefer to hold cash for now. But some are now looking into gold because, interestingly, gold has really been sold off during this war. And that is a lot of the liquidation coming out, selling these high-performing assets and to cover these losses. So expecting more strength from gold is also what we're hearing. But interesting, another market that's really standing out is the Chinese stocks. When you compare that to Japan and South Korea, actually is showing some more resilience because of kind of their reliance or their strength in renewable energy, how much oil they actually still have in the reserve, and also some of the policy support that people are expecting. So when you look at the currency front, it's also interesting when you see the strength in the Chinese yuan, almost the strongest within Asia so far this month, versus won being actually one of the weakest currency in Asia. So that's really showing the divergence and the preference as well.
Our Asia equities reporter Winnie Su there. More ahead on the Asia trade. This is Bloomberg. NASA is preparing to take a big step toward returning astronauts to the moon, with its Artemis 2 mission set for launch as soon as April 1st. The mission will test a spacecraft that's set to play a key role in America's return to deep space. Bloomberg Originals has been taking a closer look.
I think our generation appreciates having a program that now we get a chance to take our own moonshots, what we call great things that humans accomplish.
NASA's Artemis program is the space agency's ambitious mission to send humans back to the moon for the first time in more than half a century. The last time NASA sent humans to the moon, they were locked in a space race with the Soviet Union. This time, NASA wants to go back to the moon to stay in order to learn how to live sustainably off of the lunar surface.
4-stage engine start.
Prior to Artemis 2, NASA launched the very first major mission in the Artemis program, called Artemis 1, which sent the Orion crew capsule around the moon to demonstrate that they could work without a crew on board. Now it's time to show that they can actually keep a crew alive while traveling to deep space.
Our goal is get to the moon and get back. 4 days out, 4 days back.
We are going to do as much science as we can on the way. And on the far side of the moon, we're going to have maybe 45 minutes where we're in a loss of comm with Earth. And all we can do is just train our eyes on that moon surface.
The entire Artemis program has come under significant criticism for how much time it's taking to build and how much money it's costing the taxpayer. There is an estimate that between 2012 and 2025, the Artemis program has cost roughly $93 billion. Despite the criticism, it does benefit from strong congressional support. Many of the programs that are needed for Artemis are spread across the entire United States and provide a lot of jobs for constituents. While the Artemis 2 mission is coming up, Artemis 3, Artemis 4, Artemis 5 are all a bit of open question marks at the moment. There's development that needs to happen for hardware, notably with the landers that will actually take the humans to the surface of the moon. NASA is pulling out all the stops with its contractors to ensure that a landing occurs no later than 2028, but it remains to be seen if that date will actually be possible.
Today's Bloomberg Big Take also focuses on the Artemis 2 mission and NASA's journey toward returning humans to the moon. Subscribers can check it out on the terminal and on Bloomberg.com. Now, our next guest runs a space infrastructure startup that's building orbital data centers to ease AI energy constraints. Starcloud raised $170 million in a Series A funding round at a valuation of more than $1 billion. It launched its first satellite last November, powered by NVIDIA's H100 GPU. Joining us now is Philip Johnston, co-founder and CEO of Starcloud. Really great to have you with us. Thank you so much for joining us. So where do you plan to deploy your fresh capital?
Thanks so much for having me on, Shery. So we've raised this capital in order to develop our third satellite. So we're launching our second one later this year, but this fresh $170 million is going into our Starcloud 3 satellite, which will be the first one which is cost competitive with terrestrial Earth-based data centers on inference costs. So we're going to be running the same type of inference workload that normal data centers run, but we'll be doing it in space, and it will be cheaper in space than on Earth.
I want to get to the rationale on how that would get cheaper in space, but at the same time, I do wonder what your thoughts are about SpaceX trying to do the same thing and planning to deploy 1 gigawatts of orbital compute. Will there be any impacts on you and perhaps SpaceX's IPO as well?
Yeah, I mean, as I understand, they're planning to deploy maybe potentially hundreds of gigawatts per year in the end state. So starting off with 1 gigawatt and then scaling the thing very rapidly. Yeah, we're going after a slightly different customer segment than SpaceX. So SpaceX will be mainly serving Tesla and Grok workloads, and they may offer a third-party cloud service. We can be thought of more like an infrastructure and energy provider. So we interface with customers in the sense that we have a box that has power, cooling, and connectivity, and then they can put whatever chips they like in there, run whatever architecture they want, and sell to whichever customers they like. So we're more like an Equinix than an AWS in that instance.
How do geopolitical and regulatory changes and restrictions impact your business?
So far, I mean, if you're referring to the wars in Iran, we've definitely seen data centers terrestrially being targeted specifically by the Iranian regime in Middle Eastern countries, which have invested incredibly heavily over the last few years, particularly Saudi and the UAE, have been spending billions of dollars on new data center infrastructure. That now is being called into question, the longevity of those types of investments. And people are looking further afield. They're saying, okay, where can we actually deploy these data centers in places which are safe and have enormous amounts of energy? And space is really the place you can do that.
Who do you see as the biggest competitors globally? There's lots of talk about data centers in space from China, of course.
Yeah, I think certainly the biggest player in this market will be SpaceX. It looks like for in the initial run, because SpaceX has access to very low cost launch with their upcoming Starship launch vehicle. China is building new launch vehicles, but as I understand, they're sort of at least 5 years behind where SpaceX is in terms of a reusable upper stage, so the Starship launch vehicle. So the main players are SpaceX. You have Blue Origin is building the New Glenn vehicle, and they will probably be launching satellites for Amazon's LEO constellation. There's a few other startups. You have Axiom Space, you have Aetherflux. But I think, in terms of the startups, we're by far the furthest ahead. We launched the first NVIDIA H100 in November. It's about 100 times more powerful GPU compute than has been in space before. And we're about to, later this year, launch something which is 100 times more power generation again than the first one. That's really the landscape.
So, Philip, you mentioned, for example, SpaceX's low-cost launches. When you talk about space being cheaper for data centers than Earth in the future, where specifically are you seeing the cost curves that need to be crossed, especially for you to try to keep that competitive edge?
Yeah, for sure. So we see the break-even cost on launch to be around $500 per kilo. So once the launch cost gets below $500 a kilo, we will be cost competitive with terrestrial data centers. Now, Starship is designed to produce a marginal launch cost of $10 to $20 a kilo. And so long as SpaceX is passing through anywhere from 10 to 20 times their marginal launch cost, and right now, by the way, they charge about twice the marginal launch cost, then we will have a cost advantage over all of the hyperscalers. So yes, we will have a higher cost base than SpaceX, but a lower cost base than all of the hyperscalers. That's roughly the break-even that we see.
Philip, if everybody wants to get to space, are there any concerns around, say, launch capacity, orbital congestion as well?
In terms of launch capacity, this is where fully reusable heavy launch vehicles come into play. So, and particularly, SpaceX is now building these 2 Starship gigafactories. They're designed to produce 3 Starships per day. And because they're reusable, that capacity compounds and aggregates on itself. And so, we could be in a situation within 3 to 5 years where we have on the order of 10,000 times the current capacity to get things to space. And the reason is, if you build a new Falcon 9 every day for a year, at the end of the year, you still only have 1 Falcon 9. That's the current launch vehicle. If you build a new Starship every day for the year, at the end of the year, you have 365 Starships, and it has 5 times the payload capacity. It can fly 10 times as frequently. So, it's just a complete mind shift that's coming in terms of the amount of capacity that we can get to space. In terms of orbital slots and things getting filled up, we've estimated we can get at least 1 terawatt of compute in low Earth orbit in this dawn-dusk sun-synchronous orbit that we're targeting. So that's on the order of much more than the entire US power grid right now. There's plenty of space in space.
It's just not going to be competitive cost-wise until you get the new generation of rockets flying at pretty high cadence, right? Could that see a fairly long length of delay?
Correct. We are very reliant on new launch vehicles coming online. So we will never be cost competitive with terrestrial data centers unless we have a reusable upper stage. So there's a few companies working on this. There's Stoke Space, there's Relativity, there's Blue Origin. As I understand, they're building a reusable upper stage. The one that's by far the furthest ahead is SpaceX, and they're also the one that's building by far the most capacity. I'd say sometimes people would ask me, what if instead of 3 years for Starship to be ready, it's 6 years? Okay, even if it's 6 years, we're talking about an industry where, in 6 years, it could be the case that most new data center capacity is being deployed in space. That is an absolutely gargantuan amount of compute being deployed in space at that point. So you really do want to start on it now, even if you think it's 6 years away, not 3 years away.
Philip Johnston, really good to get your insights. Thanks for your time, co-founder and CEO of Starcloud there. And we do have breaking news out of Japan. We are getting the industrial production numbers coming in at a contraction of 2.1% month on month for the month of February. This is a bigger contraction than expected, but a smaller contraction than the previous month. We also have the year-on-year number is an expansion of 0.3%. A little bit of fluctuations because we had those weird effects coming from the Lunar New Year in China. Also, retail sales, very important, a contraction of 2% for the month of February, a contraction from an expansion the previous month, also a bigger contraction than was expected. And I say important because, of course, we are continuing to see inflation pressures here in Japan, a weaker Japanese yen not helping households, and that leading to perhaps fewer people wanting to open their pockets. We have more ahead. This is Bloomberg.
Take a look at what we're seeing across risk assets. Oil continuing to extend the advance as we see the Iran attack on a crude tanker really not helping matters at all when it comes to restoring any kind of confidence that the two sides are close to negotiations. This also comes after President Trump issued more threats against Iran's civilian infrastructure as well. But that attack on the Kuwaiti crude carrier that was fully loaded, causing a fire, a potential oil spill, we are getting updates in terms of the safety of the crew being ascertained. The safety of all 24 crew members has been secured. No injuries have been reported, according to the latest update. All of this, so adding to the fact that we've seen the effective closure of the Strait of Hormuz, surging energy prices, concerns increasingly not just of inflation, Shery, but potentially stagflation and recessionary conditions, something that central banks have really had to contend with.
Yeah, we'll be watching the session across Asia as we have already seen significant downside pressure for the Nikkei, which is down now for 3 sessions. And you can see futures pointing to more downside. The Kospi already at a 3-week low as well, especially at a time that we're not only contending with the Iran war, but also, of course, pressures in the tech sector. The market opens in Tokyo and Seoul are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we're seeing some pressure coming from the Wall Street session. Heidi, we had that downside pressure on semiconductors over concerns around AI, NAND, flash, of course. Storage is the key segment right now that we're watching, but we're also contending with new headlines coming from the Iran war. A Kuwaiti crude carrier hit this time.
Yeah, certainly no help to risk appetite when we get those sorts of headlines crossing the Bloomberg, right? But Shery, it just adds to the narrative that there's no certainty as to when this war now in its 5th week is going to end. We hear conflicting messages from the White House, and certainly the conflict is between what we hear publicly from the White House, what we hear publicly from Tehran. None of that seems to mesh up to this idea that negotiations are underway, that the ceasefire is sort of anywhere close to being secured, Shery.
And as we're trying to digest those headlines, of course, we're seeing safe haven assets continuing to gain ground. And we saw the U.S. dollar strength in a monthly basis, the biggest since 2022. On the other side of that trade, we've seen Asian currencies pressured, with the Japanese yen still trading close to that 160 level against the U.S. dollar. We saw a little bit more strength in the previous session, given that we heard from the finance minister officials, from the BOJ Governor Ueda, really talking about the possibility or hinting at the possibility of market intervention. We're seeing a 4th session of declines for the Nikkei and the topics. And we're watching JGB yields as well because we do have a 2-year JGB auction today. Also, we're watching the memory sector here in Japan with the names like Kioxia, for example, and take a look at how South Korea is opening right now because Samsung, SK Hynix are the names that we're watching with that pressure that we saw in the overnight session in the U.S. If you guys can switch the board, we can actually see South Korea and the open right there because we had seen, of course, significant pressure pressure for the Kospi at a 3-week low, and the Korean won continuing to weaken against the greenback, and we're already at a 2009 low. So we'll be following the tech sector, which has been a real boon for this market very closely, but the pressure on that memory side of things after Google's TurboQuant announcement and those techniques really being felt across the Asian session as well, Heidi.
Pressure points everywhere you look, whether you take a look at, of course, tech, as you just mentioned, or all of these elements sort of conflated from the Iran-US-Israel conflict. But take a look at Brent just coming online, gaining 2% at the open to open above $109 after that Kuwaiti tanker strike. We have seen those gains trading in WTI futures jumping by more than 3% as well. We are also watching treasuries, given the bond rally has really come back from its deepest sell-off in 17 months. We're seeing a lot of repositioning in treasuries and sovereign bonds at the moment. Wages being ditched at the Fed will hike interest rates. We did hear from Chair Powell saying that, look, central banks, the Fed, have very little control over supply-side shocks like the energy crisis, but that he thinks on the longer term, inflation expectations remain quite well anchored. But of course, so much comes down to how long this conflict continues. And we get back to the latest developments with that Kuwaiti tanker being hit. Kuwait Petroleum saying that the giant crude carrier anchored near Dubai was hit by an Iranian strike. Let's bring up Bloomberg Politics editor Laura Davidson. So we have seen really the ire and concern of some of these Gulf states as they get caught in the middle of this conflict, and we're continuing to see that play out.
Yes, this is still in sort of an emergency response mode. In Dubai, this tanker, fully laden, was anchored about 31 nautical miles off the coast of Dubai. So not right in the middle of the harbor, but there's a lot of big vessels that are out there anchored that are fully loaded up with oil as ships have been unable to traverse that strait. There's concerns about potentially an oil spill, but also longer-term effects here too. About there's a lot of potential targets. Was this a one-off, or is this the first of many? Putting additional pressure on U.S. allies in the region as they've been sort of waffling and deciding whether to get more directly involved or to continue to hang back. It's things like this, getting an oil tanker struck or other attacks on infrastructure that could be a tipping point for some of those allies to decide that they want to be more directly involved in the conflict or put more direct pressure on the U.S. to wrap up this war.
Do we have any indications of where the communications are between Gulf states and the White House? Because the White House, and we heard from President Trump also talking about how the 15-point plan, the most points were agreed by Iran as well. So is there an understanding between allies at this point?
There are only two parallel universes that we hear talked about, whether it's Iranian officials or Trump and his allies who are talking about it. Trump said that there have been major points of agreement, that he thinks that a deal is coming together, that Carolyn Levitt, the White House press secretary, said that behind the scenes the Iranians are being, quote, quite reasonable, and that there's essentially a deal in the offing here. Trump has said he's talking both directly and indirectly with Iranian officials, though he has declined to give any names of specific people he's working with or exactly what those points of agreement might be. On the other hand, we have the Iranians who have said none of that is happening, and that they are not discussing with the Americans directly at all. There are no points of agreement. They have vowed to continue to fight. We do have both sides acknowledging that there are some intermediaries involved, Egypt and Pakistan, for example, who have been passing some messages back and forth. But Iran has continued to deny that there are sort of substantive negotiations, that a potential deal could be coming together, as President Trump has said.
This threat to seize Kharg Island is an interesting one, right? We've seen some pretty strong threats and retaliation from the Iranian side. Is this? Do we know the kind of thinking and the strategy behind this from the Trump side?
This is a target that Trump has openly talked about being something that he would be interested in taking. He told the Financial Times yesterday that his preference, in fact, would be to take Iran's oil. That would involve taking Kharg Island. That is a really, really difficult military mission, however. Not only would ships and troops have to pass that Strait of Hormuz, Kharg Island is well deep into the Persian Gulf. So there's been reporting that there's been lots of discussions at the Pentagon about how to make this happen. The Pentagon has continued to deploy more troops to the region. About 3,500 arrived over the weekend. There are several thousand more in transit along, and a lot of these are special operations type troops, amphibious units, as well as sort of paratrooper type airborne officials. So there's a lot of movement here, though nothing has been called for. The White House has said that there are no decisions have been made about whether to take Kharg Island, but this would be a real escalation in the war, and would also potentially put a lot of American lives at risk. One of the things that the White House is weighing as they figure out their next steps.
Bloomberg Politics editor Laura Davison there with the latest on the ongoing war in Iran. Let's actually discuss the market implications with Eli Lee, Chief Investment Strategist at the Bank of Singapore. Eli, really good to have you with us at a time when we really do not understand how long this conflict could last. How are investors positioning and hedging the eventuality of where this war could go?
Right. So I think, when investors are looking at their portfolios and trying to discern the signal from the noise, it becomes really clear that, one variable is overwhelmingly the key driver here, and that's the price of oil, right? So I guess, in trying to, discern the path forward, the two questions that we're asking are, is the Strait of Hormuz open? And if not, how close is it to opening, or what's the visibility there? And unfortunately, the answer is no, and very little visibility. So I think really the focus is to manage the surge in volatility that will come over the next few weeks, and trying to manage diversification to hedge against tail risk. And that's really difficult because the safe havens haven't been working as well as anticipated, especially gold. So I think it boils down to putting in put options when the prices are reasonable and going to cash at a reasonable level.
When you talk about reasonable levels, especially with the sell-off that we continue to see in tech, valuations were pretty high. Would you say now that this is a good entry point?
I think for long-term investors, perhaps, but it is quite hard to see where the bottom to this sell-off is going to be. And I do think that really the crux is that we haven't really seen the market price in the growth side of the equation as yet. I think that's starting right now, especially with what's happening to bond yields last night. But I think the market is saying, look, inflation is going to rise. That's pretty clear. But is long-term growth going to be hurt? And I think that we are still really trying to discern that. And the question boils down again to how long this conflict is going to last.
There's a lot more chatter, Eli, about the risk of stagflation, the risk of recession as this war drags on, supply chains potentially facing COVID-style disruptions. If you take a look at this chart from our very own David Inglis, taking a look at the blue line is the current path of US inflation. We know that Chair Powell said that longer-term inflation expectations remain quite well anchored. That yellow line is 67 to 82, so oil embargo, the previous last major oil shock, and we're already seeing indications that this is something that is unprecedented, right? Does that chart concern you in terms of the trajectory that seems to be drawn at the moment? And do investors need to start thinking about places in the market where they can find not just inflation hedges, but stagflation hedges, recession-proof investments?
I think Chair Powell is quite right that really I think the data or the data set that we're looking at is long-term inflation expectations. So yes, near-term expectations are rising. The one-year break-even inflation rate has surged since the war began. But the five-year break-even inflation has been relatively well anchored. And I think, one thing to note is that the sell-off of late has been triggered by really market expectations shifting really dramatically from pricing in 2 cuts before March to now. On balance, looking at a hike right now. I think directionally that's correct, but that is probably overdone. The Fed is balancing growth and inflation risk, and they tend to look past short-term price pressures if the long-term inflation expectation is relatively well anchored. And at this point, we think that long-term inflation expectations are relatively well anchored so far.
How much more challenging is it for Asian economies and Asian markets? And where do you see opportunities in this part of the world, particularly given that there's sort of outsized exposure to these energy risks?
Right. So EM Asia, unfortunately, is relatively exposed to an oil shock. There are a few bright spots. We think the Hong Kong, China markets should be relatively resilient. Unlike most of its Asian peers, oil exports via the Strait of Hormuz only account for 4 to 5% of China's primary energy mix. I think it is quite telling that the CNY actually has been quite resilient over the course of the conflict so far. In fact, already decoupling from the rate differential versus the US dollar. Singapore, I think, has a lot of fiscal flexibility and strength as well. And so far, I think the resilience of the Singapore equity market speaks to how I think investors really can, there's this conviction that it is a relatively defensive market there.
And as we speak, Eli, we're getting MSCI Asia and EM indices erasing all of their advance and gains for 2026, given, of course, the ongoing war in Iran. Let's talk a little bit about China, because some analysts are saying that perhaps it's one market that's pretty insulated, given that it's very domestically focused. Are there any sectors of opportunities there while all of this is ongoing?
Right. So we think a barbell approach probably makes the most sense at this point. So over the near term, what's likely to outperform quality yield plays and low beta stocks. But, over the medium to long term, there are still a lot of structural tailwinds driving AI proxies, policy beneficiaries in technology, innovation, and domestic consumption, for instance. And the crux right here, we believe, is that going into this, the Chinese market is starting out at a lower, level of PE multiple versus the US, versus Europe, or even versus Japan. So that tends to, I think, lend to a more resilient profile, which is why we believe the MSCI China is actually outperforming the broader indices at this point in time.
What about the tech sector in China more specifically? When we talk about all of these pressures in the global semiconductor space around memory and so forth, would there be a case to make for China's tech names, which of course are operating in a whole different ecosystem?
Right. So we think that the pressure is going to be there. I mean, if there are going to be supply chain pressures, going to the semiconductor space, then that will also flow into, that impact is going to flow into the Chinese technology sector as well. But again, I think starting valuations really matter a great deal here. The Chinese tech giants are trading at a relatively large spread coming into this crisis versus the Mag 7, for instance. And I think if we look at the performance of this, Baba, Tencent, Baidu, for instance, these Chinese tech giants, they have held up relatively well versus the broader market. So we do think that the outlook for these names should remain fairly constructive.
Eli Leo, it was good to chat with you, Chief Investment Strategist at the Bank of Singapore, with his views around the markets. And later today, in fact, we'll speak exclusively with U.S. Trade Representative Jamieson Greer, of course, on everything from tariffs and the global impact of the war in Iran. That's coming up on Bloomberg Surveillance. And you can check out the times on your screen. We continue to follow these chip moves across Asia. We're talking about Samsung, SK Hynix in South Korea, the likes of Tokyo Electron, Advantage. Also, do watch out for Kioxia, of course. Some saying that Kioxia might be one of the ones that are most affected by Google's TurboQuant technique, and it poses challenges for flash memory makers. Morgan Stanley thinks that because TurboQuant improves inference efficiency, but it does not reduce demand for core memory like HBM, that some of those makers in South Korea could be more insulated. This is Bloomberg. Take a look at how commodities are trading early in the Asia session. We continue to watch aluminum. Of course, Iran's strikes on Persian Gulf aluminum plants are key right now. The Middle East accounting for about 9% of global production. And of course, you're watching Brent and WTI prices. We had seen WTI closing above $100 for the first time since 2022. And since then, we have now seen the attack on a Kuwaiti crude carrier also causing a fire and potential oil spill. Bloomberg Economics estimates that if the the Iran-backed Houthis begin attacking tankers in the Red Sea, oil prices could surge toward $140 per barrel. Let's bring in Bloomberg Oil and Gas reporter Dan Murtaugh. Dan, give us some of the scenarios that Bloomberg Intelligence has mapped out.
Yeah, so right now we're already looking at massive consumer disruption in Asia because of what's happening with the oil markets. You're talking about driving restrictions in South Korea, sold out petrol pumps in Australia, empty cricket stadiums in Pakistan. And so these are the kinds of disruptions that are signs of much higher oil prices than we're seeing right now. So that it won't take much to trigger a big rise in crude if the situation in the Middle East doesn't de-escalate soon. And so what economists are pointing out is, if the Houthis enter the war, if they try to shut down the Bab Strait, if they try to shut down more shipping lanes for energy to get into Asia, or if they take a further step and strike the Yanbu refinery in Saudi Arabia, which is one of the few points that's easing the strain out of the Persian Gulf right now, then there's a lot of room for oil to really, really spike up high.
What alternatives are there at this point?
Right now, the alternatives are pretty limited. In the first month or so of the conflict, we at least had a physical supply of tankers that had left the Strait of Hormuz and were on their way to arrive at these ships. So it was more of a risk and preparation kind of crisis. But we're now a month into this, and those ships are all stuck in the Persian Gulf. Only a small trickle of mostly Iranian-tied cargoes are getting out of there. And so really right now there's only one alternative, and that alternative is demand destruction. It's happening in Asia, and pretty soon it's going to have to come to the West as well. Europe might have to face this, and that's really the only way to balance supply and demand when so much supply remains offline.
Dan Murtaugh, our Bloomberg Oil and Gas reporter. Well, a forgotten 1953 oil clash involving Iran and Japan may help shed light on today's energy shock, showing how Asia can defy Western pressure to secure power and speed a shift to cheaper alternatives. Our Bloomberg opinion columnist David Fickling joins us now for more on this. And I love this historical deep dive. What's the lesson to be learnt here?
Yeah, I mean, it's an interesting episode that's almost forgotten. But, when we talk about these sort of big moments of the sort of 50s and 60s and 70s, like the Suez Crisis and the 1973 oil embargo. It's a sort of precursor to this. Basically, what happened, Japan had just newly left US occupation after World War II. This is 1953. Iran, its oil industry had just been nationalised, which knocked out the precursor of BP. And so the British Royal Navy put an embargo for the world on Iran's oil exports. And one Japanese ship operated by Idemitsu Kosan, one of the refiners, slipped through the embargo, loaded up in Iran, and then dodged the Royal Navy all the way through the Indian Ocean and unloaded in Japan. And this was a huge incident in Japan at the time. It's very well remembered. There was a best-selling novel about 10 years ago about it, a very popular film about it. It was seen as a real moment when both Japan and Iran, showed their might against the sort of old colonial powers, basically.
Have we reached another whatever-it-takes moment?
I think that's the lesson of this. It was a whatever-it-takes moment for Japan in particular. Japan was fundamentally dependent on this exported oil from the Middle East. All of Asia, of course, they're all oil importers and gas importers on a large scale. So the parallels are very strong now. And I think what it really demonstrated is that these oil importers, gas importers, energy is existential for them, and they won't easily sort of put up with things that will weaken them in the context of that.
You've written at length about the energy transition, and I do wonder, does something like this, a moment like this, is it a gotcha moment for fossil fuels? Does it push people back towards that, or is it sort of a lesson that, well, we could have made more progress?
I think with LNG, it's a very serious problem for LNG because LNG has sold itself to Asia as a reliable fuel. Shell just put out its annual overview of LNG, talking about this reliability of it just last week, which seems crazy if you're anywhere that's importing LNG. if you have domestic supplies of coal, this is probably going to push you towards it in the short term. But I think the interesting thing in the long term is a lot of Asia has restricted renewables quite a lot. Not in China, certainly, not in India, but a lot of South and Southeast Asia has made it quite difficult to build renewables. And the past sort of 12, 24 months, we've seen a lot of these regulations getting unpicked. And I think what we might be about to see in a lot of South and Southeast Asia is something similar to what happened in Pakistan over the last couple of years, where you saw a huge boom in solar because basically the government took its foot off the brake, and at that point, people started taking stuff en masse.
Bloomberg opinion columnist David Fickling there with that take. More ahead on the Asia trade. This is Bloomberg. The top corporate stories that we're tracking this hour, and Blackstone is said to be launching the first hedge fund for affluent individuals, intensifying a push to attract professionals with disposable income. Sources say the multi-strategy hedge fund plans to start trading this year, open to clients with at least $5 million of investments. Alternative asset managers have been searching for sources of capital beyond traditional institutional backers. Apollo Global Management said to be nearing a deal to acquire Atlantic Aviation from rival KKR. Sources say the transaction would value the private jet fixed-based operator at almost $10 billion. Apollo is teaming up with Singapore sovereign wealth fund GIC to buy a majority stake in the company. KKR will invest new money to retain a large interest. A deal could be announced as soon as next week. Shares of Fannie Mae and Freddie Mac surged after the hedge fund billionaire Bill Ackman called the mortgage finance giants stupidly cheap. Ackman says the stocks offer what he calls asymmetry at its best, arguing some of the highest quality businesses are now trading at deeply discounted prices. Despite that rally, both stocks remain more than 50% below their mid-September highs. Shery.
And Heidi, take a look at how some of these shipbuilders are trading in the Korean session. You can see Hanwha Ocean now gaining 2%, Taehan gaining more than 5%. And we're seeing this upside broadly in the shipbuilding space across South Korea, an industry that's key for this economy, given, of course, the ongoing tensions around the Iran war. We had seen the attack on a Kuwaiti crude carrier causing a fire and potential oil spill, of course, that could potentially mean more business for these Korean shipbuilders. And at a time when we have seen those investments in this sector grow from the South Korean government, they're also increasing their partnerships and cooperation with the U.S. Navy as well. So you can see the entire sector right now in South Korea seeing some upside, except for Hyundai Heavy, which is under a little bit of pressure today. This is Bloomberg.
We do have the RBA meeting minutes from that March meeting, and we are seeing some commentary when it comes to the ongoing uncertainty due to the war, saying that the longer conflict may have, quote, material bearing on CPI and on growth, talking about $100 oil to lift the headline CPI to around 5% in the second quarter. The war also to reduce already constrained supply capacity as well. The rise in inflation expectations would need more tightening, but that it's not possible to predict the cash rate path with any confidence at the moment. We've already heard from the likes of Westpac saying that they will continue to raise the benchmark rate 3 more times this year, taking it to more than a 17-year high. Lucy Ellis from Westpac, formerly of the RBA, saying they'll have to do that on the back of that supply shock. We've also seen, of course, the removal of the fuel excise, as well as the government grapples for ways to try and reduce oil prices, and also in the face of what has been more of a demand-driven crisis here in Australia rather than supply-driven. There's been lots of panic buying, if you will, across certain petrol stations around the country. The RBA really underscoring the uncertainty, Shery, when it comes to how central banks are having to make decisions around what happens with the war and the inflation and growth expectations and implications deriving from that.
Similar conundrum here in Japan, right? With the BOJ expected now to hike rates as soon as in April. Take a look at how Japanese markets are setting up because the Nikkei is now losing ground for a fourth consecutive session. And we're talking about the lowest levels this year already. We're watching JGB yields as well. We do have a 2-year JGB auction. The Japanese yen again weakening towards that 160 level against the US dollar, despite, of course, all of the rhetoric coming from the finance ministry, not to mention the BOJ Governor Ueda himself yesterday. And we had plenty of data also to digest today. So let's bring in senior editor Brian Fowler for more on this, because we saw some softer Tokyo CPI, some softer jobs data. I don't know. We had a lot of numbers today. So please,
yes.
tell us what this is telling us.
Yeah, Shery. So we had a storm of numbers this morning, and some of the numbers were not what we expected. We had thought that energy costs would pull the CPI index down because of utility subsidies. Those costs did fall, but they fell at a slower pace than the previous month. So that actually did not pull the index down. Really weighing on the index was slower gains for food prices. There were a few other little components, smaller gains for hotel and lodging and that kind of thing. But overall, so the CPI fell a little bit more than we thought, 1.7%. But we've known this was coming. The BOJ has flagged that there would be a temporary slowdown. And I think the bottom line is that the data today, including the IP data, which fell 2%, but that's because of the China New Year's effect. I think the data today really keep the BOJ on track for a rate hike at the end of next month. And of course, a lot could change. We've got a whole month basically to go. But the signals we've seen from the BOJ have been very consistent to that effect.
And then the thing is that you have retail sales, for example, is surprising to the downside, right? And then you're thinking the weak Japanese yen doesn't help households, and then you have inflation that could hit economic growth. But at the same time, it potentially means weaker growth ahead, especially with the Iran war ongoing. So it's difficult for the BOJ.
Yes, and they've flagged exactly that. It's kind of a conundrum that the higher oil prices owing to the conflict in the Middle East, on the one hand, will push up inflation, but it also could weigh on domestic demand, could curb output and business activity. So they're going to be watching that very closely. But again, I think we saw one member on the board in the minutes, the summary of opinions that was released yesterday, pointing out that because of the way things are going in the Middle East, if it happened to be protracted, the BOJ might not only have to consider rate hikes, but actually consider the pace of hikes, possibly hiking at a faster pace. So that, and that was a very hawkish member of the board saying that. However, just the fact that the BOJ shared that in its summary of opinions, I think shows that it wants to let us know that there is some pressure for, even more aggressive reaction.
And they have to keep up with that sort of hawkish rhetoric, right? They cannot have that potential hike just be taken off the table, because then you would have more pressure for the Japanese yen.
Yeah. And one more thing is, now with central banks around the world also kind of talking about either rate hikes or maybe no more rate cuts, the BOJ needs to try to expand that interest rate differential with other countries in order to really have an impact on the yen. And so that's one more reason why the BOJ probably needs to kind of keep going up more than one hike, probably even this year.
Fowler there, the conundrum facing central banks. Let's take a look at some of the top global headlines that we're following. And President Trump's ambassador in Ottawa says the US will not allow Chinese electric cars to enter its market from Canada. Pete Hoekstra told Canada's Rebel News that the US has national security concerns over vehicle data. Canada struck a tariff deal with China in January that allows it to import electric vehicles at a lower tariff rate. Airport wait times in Houston and Atlanta are easing after TSA officers received most of their missed pay. Travellers in Houston are moving through security in about 10 minutes, while Atlanta's airport is advising a 2-hour arrival window. TSA workers have now been paid retroactively for 2 pay periods, although some back pay is still outstanding. The Reserve Bank of Australia won't allow surcharges on debit and credit cards from October, a move that will hit banks' revenue and bring the country in line with peers in Europe and the UK. The central bank also says it will lower the cap on credit card interchange fees that are paid to banks by merchants. That will impact card surcharging on the EFTPOS, MasterCard and Visa card networks. More ahead here on the Asia Trade, this is Bloomberg. Australian Prime Minister Anthony Albanese has called on President Trump to commit to ending the war in Iran. Albanese told the national broadcaster ABC that he wants greater certainty over Trump's objectives in Iran, along with the recognition of the economic damage it's causing to the global economy. Trump has criticised allies, including Australia, for failing to help secure the Strait of Hormuz.
And maybe in particular that country, the longest bond, the longest ally. Australia too. Australia was not great.
The Australian National University surveyed over 20,000 Australians and found that most think the nation will face multiple security shocks within the next 5 years and is underprepared for what's to come. Let's get more on the country's sentiment on geopolitical tensions and risks. Joining us now is Rory Medcalf, who's the head of the ANU National Security College. Rory, great to have you with us. And I wanted to go back to the conversation with the Prime Minister and some of the ire that Australia's leadership has attracted from the Trump administration for not pitching in, if you will, with this war. Has the alliance, the relationship between Australia and the US changed, and does that benefit or disadvantage Australia's security position in a situation like this?
Well, look, I think broadly the Australian government has been very pragmatic about the alliance in the last year or two, particularly under this Trump administration. And to set the scene a little more on that, of course, the Prime Minister of Australia had a very successful visit to the United States last year, where he secured ongoing support for the AUKUS submarine cooperation and offered a big deal on critical minerals. So I think the tensions in the relationship over the Iran conflict have to be put in that perspective. Having said that, of course, there's clearly a lot of unhappiness in the Australian community, the Australian population, about the impact that this war is having, and that's beginning to now translate into foreign and security policy. So our Prime Minister is navigating this very carefully. I don't see at the moment any critical damage to the Australia-US relationship as a result of this particular conflict, but it does reinforce a growing sentiment in the community about the volatility and the behaviour of this administration.
If you talk about preparedness for these sort of external shocks, obviously we've been through COVID, but if you take a look at the risks for Australia here, it is not just energy, it's a flow-on effects through to fertiliser, to food security, on top of energy security as well. What more could be done from a policy perspective?
Well, look, I think again, going to the public opinion first and then coming back to policy, if that's okay, the work that we've been doing to try to map Australian public opinion has showed, I think, really quite a strikingly high level of concern about national underpreparedness across all of the resilience and security issues. And in fact, ironically, getting ready for the next pandemic is one of the ones where people are a little bit more comfortable because we've been through that before. But when it comes to energy, critical infrastructure, potential cyber attacks, violent unrest, the impacts of war, there are high levels of concern. There's an argument that we've really had a window of the last 10 to 20 years to be more prepared for shocks like this, whether it was through increasing fuel stockpiles, whether it was through converting the fleets of metropolitan trucking that basically carry all the goods to our supermarkets to a fuel other than diesel, whether that's LNG or whether it's electrification. There are lots of things that haven't been done in the context of the Australian Federation, and there's now, I think, a growing impetus for a united national effort, federal government, states, territories, the private sector. But of course, it is difficult to do this after a crisis has commenced.
Rory, when you take a look at sort of public opinion, do you think there is a sense that the Australian public is still reeling from the disruptions from the pandemic? Because it feels like at the moment, when you take a look at the dynamic with the energy and the oil situation, it's less of a supply shock and more of a demand shock that we're seeing.
Yeah, look, I think, again, there's a bigger picture of public anxiety. So the work that we did, surveying 20,000 people, looking at about 15 different security risks and potential shocks, and then getting a sense of how the population see those as likely or as consequential, and how prepared are we, and should the government be saying or doing more about these things? It's a much bigger array of risk. It is supply shocks, it's infrastructure and resilience. So we've encountered a lot of concern about the way that remote communities in Australia often have only, if you like, a single point of failure for their infrastructure, and also a sense that, a recognition that conflict and crises overseas now have an immediate impact in Australia, whether it's in terms of energy and the economy or whether it's in terms of social unrest and political violence. The context of this is also, of course, the terrorist attack at Bondi in Sydney last December. And so I think security is now on the minds of the Australian population. They want a clearer narrative from government about a whole-of-nation effort to address these issues, and this isn't going to begin or end with the consequences of this Iran conflict. I think the pandemic sure heightened that sense of anxiety, but there are much deeper currents, including demographically and economically.
Rory, what about the anxiety around issues with China as well, and how the challenges with the Trump administration perhaps changed the calculation for the administration on how to move forward when it comes to these global partnerships?
Also, the survey work we did was very specifically or very carefully not specific about naming countries. We were asking the population, what do you value, what do you want to protect, whether it's your democratic institutions or whether it's your safe and peaceful communities or whether it's your economic prosperity and so forth. But if you read between the lines of a lot of the data that we've gathered, of course there's anxiety about great powers and there's anxiety about potential coercion or potential military threats. So China is on the minds of the Australian population. We had last year, of course, the circumnavigation of this country by a Chinese Navy task group. We've had a lot of attention over the past 10 years to foreign interference and cyber intrusions and other risks. But at the same time, there's a recognition, I think, and this is borne out in our data as well, that China's not the only issue here. There's consciousness of the impact of the Ukraine war and Russia's breach of the rules-based order. There's also consciousness of the way the Trump administration has become such a volatile ally. And I think there's a deeper sense that the centre, if you like, the political centre in our system needs to hold, but is showing a lot of fraying around the edges, concern about political polarisation, disinformation, a lot of the shocks and the risks that we've seen in America and in Europe and elsewhere are beginning to hit home in Australia. This makes it incredibly difficult for government because I think if we have security and foreign policies that are only about the China challenge, that's not going to be sufficient. And instead, I think what the data suggests is a need for a greater national narrative about protecting the good things about Australian stability and democracy against any of a whole range of shocks, including conflict in our region.
Rory, always great to chat with you. Rory Medcalf, who's the head of the National Security College at ANU. We have more on Australia Ahead every Tuesday at 11:40am if you're watching in Sydney, 8:40am if you're catching us out of Hong Kong. You can also delve into the Bloomberg Australia podcast, which looks into the biggest stories shaping the country's role in global business. You can find that on Apple or Spotify. This is Bloomberg.
We have the latest when it comes to the BOK governor nominee. We are now hearing from Hyun Song-shin, who's the Monetary and Economic Department head for the Bank for International Settlements. He was just nominated by President Lee Jae-myung, and he's now talking about what he thinks about the South Korean economy, that it faces both inflation upside and economic downside risks. The dollar liquidity is quite stable at the moment, and the FX level itself is not assigned significant meaning at a time when the Korean won, of course, is now at a 2009 low against the U.S. dollar, and you can see it trading lower against the greenback early in the session as well. The Kospi continues to lose ground and is at the lowest levels this year as well. And we're also getting the latest lines from Japan as well, as officials are continuing to try to talk up the Japanese currency, which is also trading at new lows, very close to that 160 level. Finance Minister Katayama saying that they have mentioned their stance on taking bold actions if needed on the FX space. The finance minister saying that they're considering the impact of the currency on the economy and its people. We also heard from the Prime Minister Takaichi that they're setting up a task force to secure vital supplies. Of course, Heidi, Japan, an economy that continues to be battered by high oil prices, which of course ongoing given the war in Iran.
Shery, it'll be very interesting to see whether there's any sort of alleviation, any sign of a taco trade returning for Asian markets if the foot gets taken off the pedal for this sell-off that we're seeing at the moment. This after we had a Wall Street Journal report saying that President Trump telling aides that he's willing to end the US military campaign against Iran even if the Strait of Hormuz remains largely closed. This is according to administration officials. That would likely extend Iran's grip on the Strait of Hormuz but leave quite a complex operation to reopen it at a later date. So this is based on recent assessment, reportedly that a mission to pry open the choke point would push the conflict beyond the timeline that is given of 4 to 6 weeks. So under this scenario, President Trump suggesting that the US should achieve the main goals of hobbling the Navy, the missile stocks, winding down the current hostilities, and then setting a path forward to more diplomatic negotiations. So that willingness to end the war without reopening the Strait of Hormuz is what we're hearing, according to this latest report in the Wall Street Journal. This, of course, runs counter to a lot of the rhetoric that we've seen, given that the Trump administration, the president himself, has threatened Iran's energy assets, potentially water assets as well in the last 24 hours, while at the same time saying that negotiations are still on foot, and he's optimistic that a deal could still be made. So a lot of uncertainty when it comes to the war. We're also counting down to the market opens in China and Hong Kong. The mainland is leading some of these leading state-owned lenders reporting weak annual results for 2025. A state-mandated push to support a flagging economy has continued to erode profitability in these banks. Let's get more from our Asia equities reporter, Winnie Su. Winnie, of course, there's a lot of cross currents happening at the moment. China remains fairly well insulated, and it is earnings season.
Yeah, exactly, Heidi. You just mentioned these bank earnings that we're closely watching, and actually the results were not bad when you look at overall the two banks that reported yesterday. We're talking about Agricultural Bank of China, looking at the net income up about 2% and up about 3% and 2% for Bank of China. So that's around similar moves that we saw from the two banks that reported earnings on Friday. So it really goes to show that there is still that margin squeeze that we're looking at, given the government's push and the mandate to support the cooling economy. But at the same time, you're seeing, on one hand, some improvements when it comes to the headline non-performing loan ratios. But on the other hand, still some pockets of weakness, especially we're seeing some deterioration when it comes to the asset qualities in some of these retail portfolios, specifically in the credit card area. But overall, we are hearing analysts overall still quite optimistic when it comes to how margin squeeze is likely to bottom by the first half of 2026 before recovering. And the other areas that we're watching, we have some of the earnings coming out from property. We are also expecting Banca to report earnings as well. Now, when it comes to the macro data, we will be watching out for the PMI numbers, and that's going to be very critical to see how the Chinese economy holding up during this war as well.
And Winnie, of course, we know that the Chinese economy is very domestically focused, the markets as well. So could that mean more insulation given the ongoing war in Iran?
Yeah, absolutely. And that is what we're seeing right now so far since the war began, that the Chinese stocks overall down about 5% for this month, while you're looking at double-digit losses when it comes to Japan, South Korea. And one point you just mentioned just now, Shery, is that they are very domestically driven, but also they have these stockpiles of oil and also the reliance when it comes to renewable energy. So that kind of helps the overall country as kind of doing better than some of the other Asian countries that rely a lot on oil imports. But on the other hand, when you look at the currency front, I just had a chat yesterday with Citi's head of macro strategy, and he pointed out that it's important this time that China is actually trying to stabilize, or at least being seen as stability, while the rest of the world is a lot about instability. And when it comes to the currency front, we are seeing that really outperforming some of the other Asian currencies. So that is also another area that we're closely watching.
Our Asia Equities reporter Winnie Su there with a little bit more stability when it comes to the Chinese currency markets, with the yuan holding steady despite, of course, the gains in the U.S. dollar. And you can see A50 futures, though, pointing to a little bit of downside at the close. And we'll be watching TAIEX futures very closely, given all of the pressure that we had on the tech sector, those chip makers in focus. The China show is next. This is Bloomberg.